Let's focus on Godrej Properties. The numbers look pretty okay. The guidance to some analysts were a little softer than what was expected. To help us out with the numbers, we're joined by the MD and CEO, Mr. Gaurav Pandey. Hi, Mr. Pandey. Thanks a lot for joining in. Well, a pretty good set in Q4, but you have guided for deliveries as well as business development to be significant lower in FY26. What's the reason for this execution slowdown?
I mean, not really slow down, because if you go take a step back, right, we gave a guidance of 27,000 crores of sale for FY25. And when we were looking from a guidance perspective of this year, we wanted to do a 20% growth on the previous guidance, which meant we would like to guide the market at 32,500 crores of sales. And we did about 29,444 crores this year, which is the highest sales by any residential developer ever. And the idea was very simple, that we like to be very confident of our guidance and beat the guidance. If you see our track record, we always exceeded our guidance. So this is a number we want to really hold ourselves to. And from a collection metric, actually is even more stronger, because a lot of this business, the value gets created not just from sales, but how are you unlocking that value through great asset management, leading to great collections. So if you see our collections, previous financial year, which is FY25, was about 70,000 crores, which is like massive growth over the previous high base, so like a 49% growth. In fact, our operating cash flows were like close to 7,500 crores, like a 73% Y-on-Y growth. And in spite of such a high base, we're looking forward to delivering 21,000 crores of collections over an actuals of 70,000 crores of last year. So I think the idea is to be very aggressive on our growth. And from a deliveries point of view, which is basically projects that will get into actual deliveries, we were able to bring some Q1 projects into previous financial year from an OC point of view. So against a guidance of 15 million square feet for last year, we did about 18.4, and some of which was preponement of these. And second was last financial year was also seeing a very high base effect of commercial, because we have a commercial portfolio. We saw almost 4.3 million square feet of commercial portfolio getting into occupancy certificates last year. And this is more of a one-time event which happens once in a few years, where you have suddenly a lot of OCs coming in. So yeah, again, in spite of such a high base, we're still looking at adding 10 million more square feet of deliveries next year.
All right, Mr. Pandey, let's get further into that detail then. Even if you take into consideration the fact that deliveries have exceeded FY25 guidance of around 15 million square feet by approximately 3.5 million square feet, there is still a decline of around 50% in the guidance what you're giving for FY26. What is the reason?
Finally, projects from a delivery happen because of the sales you've done 4-5 years back, right? Because you'd sell today, and because real estate is a place where you have to build tall story buildings, you have to get a lot of amenities ready. It's a 4 to 5 years and sometimes 3 years kind of a average cycle that you get to see. So the sales that you're seeing of last 2-3 years, that dramatic delivery you'll see in next 2 to 3 years onward, right? Whereas the deliveries you're seeing today is emanating from the sales done earlier, right? So each year we're trying to prepone. So try and see from a scale point of view, about 2-3 years back, our actual delivery was about 6.6 million square feet. So if you study our data, we were doing about 5,000 crores worth of sale and grew to about 7,850 crores. This is from FY18, 5,000 crore sales. We grew to about 7,850 crores by FY22. And then the exponential growth started, where the next year we did about 12,200 crores, then 22,500 crores, and this year 29,400 crores, right? But this exponential growth in deliveries will happen, like I was mentioning, 3 to 5 years from when the sales happen. Whereas from an actual OC delivery, we were doing about 6.6 million square feet, give or take 2-3 years back. Last year, we did about 12.5 million square feet, which was a huge, massive jump. Then we did about 18.4. So you can imagine there's a lot of execution efficiency, which has brought preponement of OC year by year. And then there'll be a lag of maybe a year or so when again the OC jump will happen.
Now, I take that point. Gaurav, you've guided for bookings growth of about 10% year on year for FY26. But last 3 years, we've seen significantly higher growth rates. And I think that was what we were trying to understand earlier as well, between 31 to 84%. So once again, I mean, what is the reason for the subdued guidance, if you can be specific. Are we seeing a bit of a slowdown in the overall sales as well?
Not on the contrary. I mean, if you see our Q2 and Q3 sale, they were about 5,000 plus crores. Our quarter four was a record 10,000 plus crores, the best ever number we've ever done. And if you see, in spite of very high base of 22,000 plus crores in the FY24 cycle, we registered a 31% growth in last financial year, which is 29,444 crores. Our volume growth itself is been like 29% and 25.7 plus million square feet of volume that we've delivered. In fact, we were selling like 42 homes each day. That's the kind of scale we're achieving. Now, when you give guidance, right? I mean, what is the way you build upon guidance? So try and see our numbers from some context. We've grown about like 55% CAGR in the last 3 odd years, right? And when you have a very high base effect, you want to be very watchful that you guide the market in a way where you definitely deliver that and you tend to surpass that, right? On a very high base effect of growing so rapidly. So I think it's largely emanating from that perspective. It's not at all coming from a market risk perspective. I do feel there is an upside risk to that. And, the heartening thing for us, what we're looking from growth point of view is a slightly different strategy. If you see our numbers in FY20, we are under our economic interest in our projects used to be about 41%. And the economic interest in our projects last year is about 93%. The sales attributable to our P&L has grown by 11x in 5 years. So our focus a lot is going to be on execution and getting those into deliveries and accounting profit of the logged in profit and maintaining a very strong growth, which is about 20% on the FY25 guidance. So FY25 guidance was 27,000 crores. And we want to deliver a 20% on from a guidance to guidance perspective or 32,500 crores. But yes, you are right. It's a 10% over a last year number. So I do feel we will have a good shot of kind of beating it. But like I said, we are a sort of an institution which has always over delivered over what we say and do. And I'm very excited that with the kind of quarter four and the head start we're seeing in this quarter, there's no reason why we can't do better. But again, like I said, I just want to mention that we would like to guide the market on a sort of a more or less short number.
Okay, so let's talk about the expectations for FY26 in terms of the collections. How much of your collections will come in from existing bookings? How much would be from perhaps new bookings?
I mean, largely, we're looking at a growth from 17,000 crores to 21,000 crores worth of collections. If you just look at from a perspective, we did close to 7,000 crores of collections in quarter four, and preponement of a lot of these milestones of deliveries helped us getting it. I think collection as a metric moves, basis the quality of sale you do than any other metric. So I think our quality of sale is very, very high. And because of that, we're very confident that we should be able to meet and exceed, hopefully, the guidance of 21,000 crores. And this, just to give an idea, a fun fact is the kind of collections we did, to the best of my memory, maybe there will be only 2 developers who do sales more than that in the last financial year. So the guidance we're trying to give you from a collections is for 99% of Indian real estate, sales don't happen at that particular sort of a number. So yeah, it's a very strong number and we're gunning towards achieving that.
We take that on board, Mr. Pandey, and we congratulate you on that feat as well. Well done to you as well as the team. But let's focus on another couple of aspects. How much of the land acquisition did you do in FY25? And how much are you planning to do in FY26? How much of this will be new land acquisition in comparison to joint development? Give us some clarity.
I mean, we did about close to 14 transactions last year. In fact, bought 3 land parcels in auction in Kharagar. Otherwise, if I count them into 16, but consolidating them into one project is 14 land parcels and logged in about 26,450 crores of revenue potential through that. And we've, mostly we like to have very conservative guidance for business development because this is one metric we don't like to put, like a pressure on us that we have to acquire this much. But there is no reason we can't easily exceed that, because of the opportunities. These are binary number. But yes, we've given a sort of a very conservative guidance of 20,000 crores of business development that we want to do. But yeah, I mean, this has an upside risk, but this is not one metric we lose sleep over. We have to buy land parcels at the right valuation, at the right time in the right micro markets. But yeah, fair to say we have enough and more pipeline to meet this guidance.
Okay, Gaurav, finally, your cash flows have grown significantly. I think you're at about 7,400 crores as of the end of last year. What is the utilization and, how's the position looking from a cash perspective?
I mean, this is the number which is a derivative of your cost of construction and collections. We really don't give a guidance on operating cash flow. But yes, like I was mentioning, we have a very healthy visibility of collections. We will be increasing collections of 17,000 crores to 21,000 crores. So yeah, I feel we will continue to hit very good operating cash flows in this year and the years to come, because we've now got a vicious circle of good project churn and high quality of sales.
All right. Okay, Gaurav, we'll leave it on that note. Thank you very much for joining in and good luck for the rest of the year.